Hey, what's going on, coin traders? How we doing? Thanks for joining me for another show. Looking at GRT, the graph token. GRT on that ticker suffered a pretty big flush like the rest of the crypto space. Pretty good volume coming in, actually kind of comparable to a lot of the strength of the volume coming in, but only 2 days here of sustaining bearish volume. Very good sign, especially with these big, long, lower shadows here on these daily candles. Now looking at a pretty good rebound. And the thing that's extremely notable about this bounce right now, and if you have been following me here over on Twitter or X, I have mentioned multiple times how we have been ready for a pullback and how we were going to see it. So a pullback like we have been seeing in this instance is exactly what we were expecting to see, especially with kind of this linear uptrend. Know that we do have to see a pullback and kind of test some of these lower supports once again. So very normal and expected for the things we can't see. And just a reminder too, if you're not following me here over on Twitter or X, at @coin_trades is the handle. Definitely drop me a follow. Look forward to chatting with everyone over there, staying updated on all things GRT and the rest of the crypto space, including a lot of these analysis where we're actually talking about expecting pullbacks and things like that. So overall, still a good sign because we have to see a pullback and a retracement to confirm some lower supports if we actually want to see higher highs continue, because we actually can't get a trend just to go infinitely up without correcting and seeing a little bit more of that pullback. So got the nice flush here out of the way. We did have a pretty sizable pullback from the highs down to the low, 32%. But if we actually look at a Fibonacci retracement from the low here down up to the high, pretty much just shy of the 35-cent level, looking at a pullback that did kick off right around the 50% retracement, coming in at 23.88. Now, we did almost maintain a close on top of the 38.2, which would have been great, but more or less we kind of found support right around this overall zone. So not necessarily a complete deal breaker that we did break below that and hold a close just shy, but obviously within the next day, reclaiming that level once again. So still a good sign, 38.2 coming in at 26.48. Now, on the current daily candle, we are looking still at getting stuck up just below the 12-period EMA, with closing looking to happen here shortly. So we will be starting a new candle within the time of recording here. So looking like we will see a close below, but still on top of this big 26-period EMA, which has been a big resistance on the last candle. So big support above the 50, resistance on the last candle below. So forming a nice close is still a very good sign. And so especially if we look at the volume of the candle that we got yesterday, very small body on that, especially given the amount of volume that came in for the overall candle. So if we look at the previous day, we were looking at 75.52 million for volume, but the following day that just closed yesterday, 64.05, yet we did maintain an inside bar. And so once again, an inside bar is essentially where this candle fits within the highs and the lows of the previous candle. So for example, the current daily is not an inside bar because we do have a higher high in price than the high that we got to on yesterday's candle, but we actually do see a higher low. So because we actually did break bullish outside of this range, very nice upside directional move, and especially maintaining some of these support levels. And I do want to draw a price level here because if we actually look to the left, so we were maintaining big closing support for 3 candles here on top of 26.12. Looking left, big point of resistance for the close, and then finally found it as a price level of support before putting in this current trend high. So a very big, nice support level, exactly what we want to see when we do have these pullbacks, is pulling back to a support level on the short term that was the most recent level of resistance or major resistance prior to putting in where we're at for a current trend high. So if we want to talk about a little bit more inside bar examples, do want to zoom in on the trend high here, pretty much coming from the 5th of December to the 7th. So 3 days we actually saw inside bars happening. So we saw the highs and the lows, and then the following day we actually saw highs and lows fitting inside the previous day's highs and lows. And so this is a very big sign of consolidation happening on some longer term charts. So if we get monthly inside bars, weekly inside bars, you get the picture. But it does mean shorter term consolidation is happening. And typically once we do get a break from that, that will indicate the likely direction of that inside bars. So for example, the bar that broke out or the candle that broke out was this day, and we did dip below that support or the lowest price level, which did indicate a sell-off was going to likely be happening in that instance. So right now, even though we haven't had multiple days, we still have had a break of an inside bar still to the bullish upside. And like we talked about, because we're actually looking at a little bit less volume, yet still a very nice bullish body compared to the bearish sell-off body that we had yesterday with a lot more bearish volume, this is a very good sign and likely will lead to a little bit more follow-through, at least we're hoping anyway from a bullish standpoint, because if not, then pretty much what's going to happen is we will be looking to set the next lower high and then probably looking to put in a lower low for a little bit more of a longer-term pullback. So that's really one of the scenarios and the risks that we run with having this type of setup if the bulls don't in fact maintain the current level as that ultimate low without actually putting in the next higher high here coming in before long. So the other option too is actually setting up for a little bit longer term consolidation, which actually wouldn't be the worst thing as well, because in that instance, we would allow the rest of these EMAs to catch up, provide support and kick out and be on our way once again, because a consolidation pattern is just a longer trend continuation pattern. Now, if we want to go ahead and pull up the RSI, one of the reasons that these dips are nice is because if we look at where we're at right now and where we actually bottomed, we're kind of bottoming right around the 50 line. So if we look left, the last time we were at that level was pretty much right at the point where we were kicking off after the bottom when we did start this Trump pump here to the upside on the current trend. So we actually have a lot more room to grow with getting to the levels that we actually saw overextended on this RSI, yet we actually don't have the pullback as much like we saw in that instance. So we do have a very nice potential of actually running up a lot higher, because as you can see, the last time we got a back test and support confirmation here of these exponential moving averages, we continued to run up in that instance as well, especially with a lot of nice bullish volume. So especially if that does maintain, that's exactly what we're expecting and predicting to see. But like we said, a lot of things still need to shape up and happen, because one solid flush does tend to reset a lot of these indicators, but we also need to start seeing a lot more of that follow through and a lot more of that strength coming in, highlighting that a lot of the bulls are buying this dip in strong numbers. Now, if we flip over to the weekly chart here, very nice bullish formation of all the exponential moving averages on this weekly. So 12 on top, 26 and 50. But despite having a nice lower shadow on the current weekly candle, we know that still we could get a very big potential of backtesting some of these EMAs as support, especially trying to look at forming some of these levels as a previous close. Now, the weekly candle did find pretty nice support, and like we said, that did come when the weekly candle hit a low of 23.7. So a very big support level, and actually looking to the left here, that was a very nice support point here on the rally here that we experienced last spring. So a few other similarities. One of the big things we're looking at is about a 5 weeks worth of upside. So we had 5 nice bullish upside candles. Volume actually very similar to kind of what we're experiencing now with 5 nice bullish upside candles. So does that mean I think we're going to get the same type of pattern and actually pull back pretty substantially? Well, no one knows for sure. A lot of things do set up, but we know that how far we are above this bullish cross right now is actually not comparable to where we actually were in this instance in the spring, pretty much back at the start of March, where we did start to initiate that pullback. And especially with the rest of crypto being very nicely bullish right now as well, we do think the trend is a lot stronger in favor of an upside move, especially since we have actually found a very nice break of this previous resistance. And so now, because we have backtested this level twice, we do need to actually prove that it is going to be supportive, at least on one attempt. So that's a very realistic scenario as well, because it's not really too likely right now after 5 weeks of just continuous upside that we'll only have 1 week of downside and then continue once again. Now, it's obviously not impossible, but when we look at this chart, especially how it has compared to other scenarios where we've had upside, we have had plenty of opportunities where we've had upside, consolidation, a little bit of pullback, upside, a little bit of consolidation on this flag pattern, confirm support, kickoff once again. So very possible scenario as well to actually see a little bit more of that flag type pattern, allow these RSIs to go up, set that higher longer term low, and then be on our way once again, seeing a little bit more higher highs on the upside. I do think that GRT is an extremely unique crypto that we haven't seen a lot of other copycats from yet. And the use case is extremely important for growth of blockchain, especially since there aren't really a lot of other indexers right now. And we do know that indexing a blockchain does take a lot of computing power. So to have something like GRT implemented and actually being used does say a lot about potential for what we could actually expect. And especially now starting to see a big trend and change reversal that we kind of haven't really seen, because at the start of the market cycle last year, that's when we got the launch of GRT and put in the all-time high. And so after this big major pullback, this is the first time we've really been in a bearish setup and actually had a very nice potential for a big bullish break. So we could actually be setting up for something extremely major here as we do look into the future for GRT. Now, I don't really like talking too much about speculative price targets, but one of the things that we do have is a very realistic shot to hit right around the 170 to about the $2 level. So if we look at an extension from the Fibonacci's based on the spring cycle last year down to the low where we actually hit, pretty much right around the 13-14 cent mark, then based off of that, we would be looking at a 4.236 extension, pretty much right just shy of the 170 level, which if we do look left here, that's pretty much going to come in right around the heart line. We were finding a lot of this sideways chop action coming off of the all-time high. So from about March of 2021 until about April of 2021, after peaking here in February of 2021. So we will be coming in upon 4 years from hitting the all-time high from GRT, and especially after pulling back and failing to set a new higher high when a lot of the rest of the cryptos and altcoins did. So we actually did get a lot of the peak excitement coming in right off the launch. And because of that, we actually do think there's a potential of not setting a new all-time high. At least it's not guaranteed anyway at this point. And so that's kind of why about the 170 to even all the way up to about the $2 range would actually be a pretty nice upside target to see GRT hit. And so from current prices, we would actually be looking at a gain of about an upside move of about 500%, all the way up to potentially about 600. So about a 6 to 7x return from current prices potentially is where we would be looking at a high coming in if we do start to hit those speculative targets. Because if we look at the amount of pullback from the all-time high right now down to the low of about 5 cents, 98% pullback, and typically with pullbacks that large, we don't necessarily expect to see a new all-time high come in the following cycle at least. So not necessarily to say it won't happen at all, especially because we do know that GRT is a good use case, and I think we'll see a lot of integration and adoption. But we know that the following cycle after hitting a new all-time high, and it's not the new shiny thing, does make it a little bit more difficult to have that performance, especially in the face of a lot of other new cryptos that are coming out and getting that shiny hype. But would love to know any questions, comments, issues, disagreements, all that stuff about the price down in the comments section and what your speculative price targets are as well. So do look forward to getting back to everyone talking about potential price targets for the upcoming cycle for GRT. But otherwise, that is going to go ahead and wrap up the show for today on GRT, the Graph Token. Hope you all enjoyed. Please hit the thumbs up, like, and subscribe if you have not done so just yet. And as always, do appreciate all the continuous love and support. Don't forget to drop me a follow over on Twitter or X at coin_trades is the handle. Chat with you all there soon. But that is it for now, though, so stay safe, take care, coin traders, and I'll catch you back in the next video.